Hey everyone, and welcome to this deep dive. We're going to be taking a close look at the Bank of Canada's recent interest rate decision.
Yeah, it can be really breaking down exactly what happened and why.
You're probably wondering what it all means for the economy,
Right, like what does it mean for your wallet
especially when it comes to mortgages.
and the housing market in general?
We've got a lot to cover today.
Yeah, we do.
We've got some great sources here.
Yeah, some really interesting stuff.
We've got news from Bloomberg, a press release directly from the Bank of Canada, a report from the Canadian Real Estate Association.
We've even got some analysis on the commercial real estate side from the Altus Group.
Really going to connect the dots between all these to give you a really clear picture of what's happening.
Exactly. We're going to try to go deeper than just the headlines.
All right, so let's jump right into the big news.
Let's do it.
The Bank of Canada just slashed their key interest rate again,
Yeah, they do it again.
this time by 50 basis points.
That's a pretty big move. For those who need a refresher, a basis point is just 1/100th of a percentage point.
So yeah, like 0.5% off borrowing costs.
And this isn't the first big move they've made.
No, not at all.
It's actually the second major cut in a row.
To see a move like this outside of the pandemic, you'd have to go all the way back to 2009,
Wow, 2009.
the financial crisis.
Wow.
This cut brings the rate down to 3.25%.
Which is a big signal.
Oh yeah, they're really trying to stimulate the economy.
Bloomberg is reporting this puts Canada's rate a full 1.5 percentage points lower than the U.S. Federal Reserve's rate.
Wow, that's significant.
Biggest gap we've seen since 1997.
That is a long time.
And get this, the Canadian dollar, the loonie, it actually got stronger after the announcement.
Really?
It was the only G10 currency to gain value against the U.S. dollar that day.
That's interesting. Could be that investors are feeling optimistic about the Canadian economy, despite the slowdown.
So let's get to the big question. Why are they cutting rates so aggressively?
Right. Is the economy really in that much trouble?
Well, the sources we have definitely paint a picture of an economy that's not doing so great.
Growth has been much slower than expected. The Bank of Canada's own numbers show Q3 GDP came in at just 1%.
That's pretty low.
Yeah, it is. And the job market is also softening a bit.
We're seeing a slight uptick in unemployment.
Yeah, unfortunately. And businesses seem hesitant to invest, which is further dragging down growth.
But the Bank of Canada's press release also mentioned they revised historical data, showing higher investment and spending in the past.
Oh yeah, that's true.
Doesn't that mean things might not be as bad as they seem?
Those revisions do highlight that our understanding of past economic performance can evolve over time,
I see.
but the current slowdown is still a real concern.
Makes sense.
It's like looking back at old photos and remembering how much fun you had,
Right.
but then realizing you've got to deal with this messy room in the present.
Okay.
The bank is clearly focused on those immediate challenges.
All right, so we've established things are a bit sluggish, but weren't we all freaking out about inflation just a few months ago?
I know, right?
How can the Bank of Canada justify cutting rates if prices are still going up?
That is the question, isn't it?
It is.
Well, the good news is inflation has actually cooled down quite a bit. It's hovering right around that 2% target.
Oh, wow, really?
Both the upward pressure from rising housing costs and the downward pressure from falling goods prices, they seem to be easing.
That's good.
It is good. Bloomberg mentioned an upcoming sales tax holiday.
Oh, yeah.
And the Bank of Canada said they will look through these temporary effects on inflation.
Interesting.
What does that even mean?
Basically, they're saying they won't overreact to short-term blips in the data.
Okay.
You're going to focus on the bigger underlying trend.
Makes sense.
It's like trying to read a book when someone's flicking the lights on and off.
Right.
You need to just ignore the flickering to understand the story.
I see.
Those temporary factors can really distort the true picture. So the Altus Group analysis brought up another wrinkle. I don't even want to say it.
Uh-oh.
The T word.
Tariffs.
Yeah.
The potential for tariffs on Canadian exports from the U.S., that's a big question mark hanging over the economy.
Right. They're like a major wild card.
They really are.
Even just the threat of tariffs can spook businesses, make them less likely to invest, which could make the slowdown even worse.
Absolutely. It all comes down to confidence.
Right.
Uncertainty is rarely good for business.
So is it fair to say the Bank of Canada is cutting rates now as a kind of insurance policy
You could say that.
in case things go south with those tariffs?
They're trying to get ahead of the curve.
Instead of waiting to see what happens.
Right, they're taking preemptive action to cushion the blow.
Okay, I get it.
Uncertainty is like a dark cloud over the economy, and the bank's trying to shine a light through it.
I like that analogy.
Thanks.
All right, so we've got a good handle on why the Bank of Canada decided to cut rates. Okay, so now let's talk about something I know you're interested in. Yes, what does this all mean for the real estate market?
Well, lower interest rates typically give the housing market a boost.
Right, it makes things more affordable, right?
Exactly. Mortgages become cheaper, so more people can jump into the market.
Maybe even upgrade to a bigger place.
That's right.
And are we seeing any signs of that happening yet?
We are, actually.
Oh, really?
The latest data from the Canadian Real Estate Association, CEREA,
Oh, yeah.
shows that home sales actually jumped in October,
Really?
hit their highest level since April of last year.
So lower rates are already having an effect.
It seems that way.
Interesting.
And the Altus Group analysis also pointed out that the bid-ask spread is narrowing.
What?
The bid-ask spread.
What's that?
It basically means the gap between what buyers are offering and what sellers are asking, that gap is getting smaller.
Oh, so like buyers and sellers are kind of starting to see eye to eye.
Yeah, exactly.
Does that usually mean something?
Often it signals the market is finding a new kind of equilibrium. Could mean things are stabilizing,
Right.
or even heating up again.
And the CREA report, they called the jump in sales an October surprise?
Yeah, they did.
They hinted it could be a preview of what to expect in the spring market.
Especially if rates continue to decline.
So some good news, potentially.
Maybe, but I wouldn't celebrate too early.
Okay, why not?
Remember that poll the Altus Group did?
Yeah.
It showed that a lot of developers are still kind of hesitant.
They're not jumping back in yet?
Not full force. They're waiting to see if rates drop even further before they really ramp up construction.
So they're being cautious.
Yeah, it's like a chess game. Got to think about the next move carefully.
Makes sense.
So while lower rates are encouraging, it doesn't guarantee a quick rebound for the housing market.
So it's not all sunshine and roses?
Not quite.
What else should we be keeping an eye on then?
Well, one thing is consumer confidence.
Okay, how people are feeling about the economy overall.
Exactly.
That makes sense.
If people are worried about their jobs or the future, they might not want to take on a mortgage.
Right, even if the rates are low.
Exactly. It's all about feeling secure.
And speaking of big decisions, there's a big one happening south of the border.
Oh, yeah?
The U.S. Federal Reserve, their interest rate decision next week.
That's a big one. Could really impact things up here.
It could affect the Bank of Canada's future moves, right?
Absolutely.
It feels like we're all just kind of waiting to see what happens down there.
The Fed's decision could set the tone for global interest rates,
Yeah, it could affect everything.
Like the value of the Canadian dollar,
Right.
the cost of borrowing money here.
It's like we're all tied together.
We are, in a way. These decisions have consequences everywhere.
It's like a global game of tug of war.
Trying to find that balance.
Yeah, exactly.
Yeah.
Yeah, it really does feel like we're all on the edge of our seats waiting.
Right. What's the Fed going to do?
It's a big deal for us up here, right? Could really shake things up.
No doubt. Especially for the housing market. So many people are watching that.
So let's game it out. What happens if they raise rates?
Well, it puts pressure on the Bank of Canada to follow suit.
They got to keep up appearances.
Kinda, yeah. But they have to weigh it super carefully.
Why is that?
Raising rates here, that could really slam the brakes on the housing market recovery.
Oh, so it could backfire.
It could, yeah. And it could even stall out the whole economy, put us
Yeah.
back in the slow lane.
So it's a tough call.
It is a real balancing act.
So it's not as simple as just doing whatever the Fed does.
No way. Bank of Canada's got to think about Canada first, right?
Makes sense.
Our inflation's different, our job situation, how our banks are doing, all that stuff.
Right.
So they might say, hey, even if the Fed goes up, we're staying put.
Or even cutting more, right, to really give our economy a jolt.
Exactly. They got to do what's right for us.
This reminds me of something we talked about earlier, the loonie getting stronger after our rate cut.
Oh, yeah, right.
Could that be a sign we've got some wiggle room?
Yeah.
Like, even if the Fed does something different, we're okay.
It could be. Investors might be saying, hey, we trust the Bank of Canada. They're making the right moves.
Even if they're doing their own thing.
Exactly.
Yeah.
But there's a flip side.
Ooh.
If the Fed cuts rates, it could start this domino effect.
Oh, I see.
Other countries might follow suit, including us.
So no matter what, it's a big deal.
It is. The whole world's watching this Fed decision.
It's like this giant game of economic tug of war. Everyone's pulling in different directions.
And we're all trying to find our footing.
So, okay, big picture stuff aside, what does all this mean for the average person listening? Like, what should they DF?
Honestly, first thing is just stay informed. Don't bury your head in the sand.
Right, keep up with the news, read some analysis.
Exactly. Knowledge is power, right? The more you understand this stuff, the better decisions you can make.
With your own money, with your investments, all that.
Exactly. And don't just react to things, be proactive.
Like, don't panic and sell everything if the market dips a bit.
No, have a plan. If things get bumpy, you'll be ready.
Okay, so practical tips. Should people be running out to buy a house right now? Lock in a mortgage before rates maybe go up.
I wouldn't jump the gun like that. Buying a house, getting a mortgage, those are huge decisions.
Right, not something you want to rush into.
Think about your goals. If buying a home is important to you, do your research.
Get pre-approved, know the risks.
Exactly. And if you're really worried about rates going up, talk to someone who knows their stuff.
Like a financial advisor.
Yeah, get some professional advice.
So there's no magic answer for everyone. It really depends on your situation.
Totally. We've covered a lot today.
We have rate cuts, Fed decisions, housing market. It's a lot.
Hopefully people listening feel a bit more in the loop now.
Yeah, that's always the goal, to give you the info so you can make the best choices for yourself.
The economy is always changing. You can feel unpredictable.
But the more you understand it, the better you can navigate it. All right, folks, that's going to do it for this deep dive. Thanks for joining us.
Yeah, thanks for listening.